This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending December 19th, 2020. Our question this week is, what is the Christmas rally? The answer will be provided later in the video. This week the market was up. The Dow Jones Industrial Average decreased 0.41% on Friday, but was up 0.44% for the week. The S&P 500 decreased 0.35% on Friday, but was up 1.24% for the week. The Nasdaq decreased 0.07% on Friday, but was up 3.05% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the major indices. On Monday, the Dow Jones Industrial Average and the S&P 500 were down, but the Nasdaq was up. On Tuesday and Thursday, all the major indices were up. On Wednesday, only the Dow Jones Industrial Average was down, while the S&P 500 and the Nasdaq were up. And on Friday, all the indices finished down. The new unemployment claims were 885,000 versus 808,000 expected. Retail sales fell 1.1% in November. An FDA panel recommended approval of Moderna's COVID-19 vaccine for emergency use. The Federal Reserve is going to allow banks to do buybacks again. Congressional COVID stimulus bill negotiations are being delayed over an issue concerning the Fed's lending powers being restored. The House passed a bill that, for 2 days at least, prevent the government from shutting down. And the Federal Reserve stated that it will keep buying bonds until the economy gets back to full employment. New unemployment claims, retail sales data, FDA panel recommendations, banks stock buyback rules, House funding bills, COVID relief bill negotiations, government funding extensions, Federal Reserve bond purchasing policies are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top powers that be is the Federal Reserve. The Federal Reserve is the most powerful entity in the world. In this week's news, the Federal Reserve announced that they would allow big banks to buy back stock shares again. The result was JP Morgan, a big bank, stock price jumped by 5%. The Fed also announced that they will continue to buy bonds. When the Fed buys bonds from big corporations, the corporations often buy their own shares back or the shares of other companies, which increases the demand and therefore the stock price of those corporations. Which brings us to our question of the week. What is the Christmas rally, also known as the Santa Claus rally? Well, the Christmas rally is the tendency for the stock market to increase in the last couple of weeks of December over the Christmas holidays. Will there be a Santa Claus or a Christmas rally this year? Is the Santa rally real or is it fake? Is the market going to go up next week and up into the new year? Do you own any stocks? If not, why not? Are you afraid that the market may fall again? Again, the market will fall again at some point, but right now it is making all-time highs as all 3 major indices hit 52-week highs this past week. But I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending December 19th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It is at the top of the first column. It increased 43.04% for the week. It was up 4.35% on Friday. In fact, it closed at a 52 high on Friday, a 52-week high on Friday. Grayscale is an investment vehicle or ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safekeeping Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased almost 260% year to date. I do have Grayscale. I bought some a couple of weeks ago to get exposure to Bitcoin price movement. It is not a cash flow trade, and I cannot generate cash flow from it because it does not have options. I use it as an indirect investment in Bitcoin. Whether a stock is going to go up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of December 19th, 2020, the Southside portfolio is outperforming the S&P 500 index ETF SPY. Year to date, the Southside portfolio is up 27.74% versus 14.34% for SPY, a difference of 13.40%. The Southside portfolio is beating SPY by 13.40%. This week, equities, including puts, calls, and ETFs, make up 70.01% of the portfolio. Cash is 29.99%. The cash flow generated for this week was 1.80% of the portfolio account value. The account value changed by plus 2.27%. Meanwhile, the S&P 500 ETF SPY changed by 0.82% for the week. I sold option contracts on 8 positions this week, 3 calls and 5 puts. That ranged from $125.35 to $614.34. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the SouthsideSchoolOfFinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.